Hey, happy Tuesday, everybody. So hope everyone had a great 3-day weekend, 4th of July. God bless America. We'll do it with the bull in the background today because the market needs it. So let's pop right on over to the market. Let's get right to it. Let's go check out CNBC. You can see the Dow's down about 350 points, the S&P about 32, 33. The Nasdaq, after a strong opening, just rolled over. So tech's giving it up a little bit. And there's small caps. Your small caps have been on a tear lately, which is usually good signs for an economy. And they're kind of rolling over today too. And what's sparking this? There's a lot of things could be sparking this. Tomorrow we have our Fed meetings. Let's go look at the economic reports for this week. You can see today we had our ISM index, which came in soft. You can see it there, way soft. That's probably spooking the markets a little bit. We had a blow up in oil overnight, right? Oil pushed over that $76 range. It's pulled back since then, but it could just be a little profit-taking consolidation. Consumption is still high. OPEC's having a little spat or something, so that kind of triggered a little price run. But the oil is still very bullish. So that contributes to your inflationary concerns, right? There's also was quite a few stories over the weekend, if you guys were paying attention. Couple of your big grocers. I think General Mills was one of them, if I'm not mistaken. I can't remember exactly who, but a couple of them came out, and one of you even said they're starting to see about 7% inflation in their producer prices. So it'll be interesting how things go forward and how these FOMC meetings come out, and then we'll have Fed Bostic speak after that at about 3:30, right before the close of the markets. But let's see how things go. Job openings came in flat, right? Or they're expecting job openings to be flat tomorrow. Then we'll get the Fed meetings in minutes in the afternoon. We'll get a Fed speaker at the close. But then we'll roll into Thursday, right? And we'll get our normal employment and also to our consumer credit and wholesale inventories on Friday. So might be a little anticipation of some inflation concerns, right? These guys have been saying for months now that inflation is tame and it's controllable. And what is the term for it? Transitionary or something like that. They're making up words. That's the way politics are nowadays, right, guys? If we don't know what to say, we just make up words, right? Anyways, next week is a big week, right? We've got a CPI coming out for June. We've got the core CPI coming out for June. Then on Wednesday, we have the PPI coming out in the beige book, and then we roll into our normal economic reports for the labor and stuff like that. So this could be an interesting 7-day stretch, guys. Let's pop on over to the market, and you can see the market might be reacting to that, taking a little profits off the table. Maybe the rally's running out of steam. Who knows? The infrastructure bill, it got a little hope this morning, right? With whatchamacall, one of your groups in politics, right? Washington is kind of like, how can I put this? Washington's kind of like a village right now, and you've got all these tribes warring right now, right? You've got the squad, you've got these moderate Democrats, you've got, of course, the hard right, and then you've got the medium right and stuff like that, right? And they're all just kind of fighting right now. Nobody's on board together saying, let's move the country forward. And I think that's going to hurt us over the next couple of weeks, but we'll see. Like I said, the infrastructure deal got a little bit of a boost this morning. And now they're calling for a solo vote, which means that a vote on it without the reconciliation, the budget reconciliation attached to it, whether that comes to true, like we told you a couple weeks ago when they were touting this infrastructure deal as being a deal, right? Remember, what was his name? McCarthy came out of the meeting or something like that, and he said, we've got a deal. Well, we don't have a deal until we have a deal, until it's law. So we'll see how this shakes out, okay, along with budget reconciliations and everything else. All I can tell you guys is core prices are rising, right? We see it, right? We just had a couple big millers come out talking about 7% they're seeing on the bottom line. Gas prices, right? Everything is going up. It's getting more expensive. Now, what I always teach you guys about inflation, right? Inflation is a good thing. It actually is a good thing. It's a sign of growth. You grow, you have inflation, but the numbers have to stay in line. And a lot of them have to do with wage growth, right? You're paying $1 more for a gallon of milk. Guess what? You need to make $1 more to afford that, right? Or you have to reconcile your budget. And unlike the federal government, we don't get to run debt, right? Credit cards run out. We can't print more money. So it becomes a little tempest in a teapot. You know what I'm saying? When these things aren't in line. Labor growth. We need to get people back to work. The government is already printing money to pay the current entitlements, right? And then it has to print more and more and more the longer people stay on these social programs. Social programs. Sometimes people get the impression that I don't like those, but I love them. I think anybody that needs help in our country should be given help. The problem is when people start working the system, right? And then all of a sudden people aren't contributing, right? Everybody likes to talk about the top, right? The cream of the crop, the big earners, the rich people, right? We need to take more of their money, right? But maybe we just need to make the little people make more money. How would that be? And keep a little bit more. Wouldn't that be a nice little change from the way things go? But look, guys, we're stepping back. We talked about in our live room this morning, we wrote covered calls on all our positions so that we're protected in a little bit of downturn on the market. Make a little money on that. We're staying tight on this spider short and the Twitter short. Twitter had a good morning, but it's rolled over. The spider short's starting to come into line now after weathering the Thursday and Friday bump ups in the market. We're still long energy out to September. The energy play, will let it sit for right now. We'll let the market gestate and stuff like that. We don't think this is the end of the world selling. What we think is we're starting to get into a sideways pattern here on the market. And it's like water. It's starting to try to find its level. Is the level at 4,000? Is the level at 3,000? Once it finds that level, we think we'll go sideways a little bit, except for certain sectors. Excuse me. A little bit too much coffee this morning. Except for certain sectors, and energy is one of those sectors. Now, remember, guys, for you guys that are looking to protect your portfolios against inflation and interest rates and stuff, look to your tips, the TIPS. Google it, and you'll see a bunch of great funds for that. Utilities generally do well. Energy generally does well. What doesn't do well in an inflationary situation, a rate hiking situation, is your high valuations. So you want to watch out for those. Okay, guys, that's just a little advice going forward. Let's go take a look at the market a little bit again. One more time. And let's do a little refresh here. See if it got nothing turned green. No, just kidding, guys. We think the big thing right now is this. Look at your bond right now, your 10-year bond. This is your inflation indicator, right? Everybody's been talking about it since what? The end of last year, right? Remember when it popped up to 1.7? Everybody's freaked out. Hey, inflation's coming. But the thing's really subdued, right? Even though you're seeing the actual signs for inflation, you're not seeing it relating that. How come? How come? Is that the market telling us that inflation fears are unfounded? Well, guess what? That's your Fed. Your Fed is buying these hand over fist, over $1 billion a month. So they're artificially stimulating it in an economy that should be exciting it. So we'll see how that plays out over time, but we don't think it's a good formula for going forward. Gold, right? Gold really had a big day this morning. It popped over 1,800. As the day went on, it looks like it's getting bearish across the markets as far as money goes. Across all your asset markets, it looks like in the last couple hours, everything went a little bearish, right? Your oil had a big morning. It rolled over and went red. Gold had a big morning, but it's rolled over and come back down. Your markets, right? Your Nasdaq had a great start. And it's been the superstar, right? With these, even though with the high valuations and stuff, you had Apple going off, you had Microsoft going out. In the last hour or two, guess what? It just kind of rolled back over. This might be your last gasp with your market while it is facing some of these facts, right? With inflation and how we're going to deal with it going forward. Your crypto market's still sideways right now. You can see it. The encouraging thing in your cryptos is Ethereum, the Ether coin, took back that 2000, and it seems to be holding it pretty well, which is takes it kind of out of the doghouse. It's still going sideways, but it's going sideways at a level that's not, it's not really a detrimental level. It's just, it's a buy range. It's a buy range right now. We told you when it was under 2000, you should be buying it hand over fist. Anytime this thing goes under 2000, it's a buy, a definite buy. And you can see you would be up about $300 a coin. But Bitcoin, right? Bitcoin, let's pop on over to charts real quick. You can see, look at that oil chart. That's a day oil chart. You can see we had that big explosion in the morning and boom, we just came right back down. So it's kind of an interesting day for oil. But if you look at the overall chart, not much except that it came back down to this support here, and we'll see how it plays out from there. The Nasdaq chart was a lot more exciting today. You see how we had that big green bar on Friday. And guess what? We came out of the gates. If you look, you see that top wick there. The buying just dried up, and now it looks like it's selling off. The Dow futures are doing about the same thing, and so are the S&P 500. It's just an interesting moment in the market right now, guys. Apple, right? Let's go check Apple. You can see Apple's back over that 140 range, but it was up in the 142s, high 142s, high 142s this morning. So even it's lost a lot of gas. It's like in the last hour or so, guys, everything just kind of softened. So, and that's probably in anticipation of this Fed minutes tomorrow and stuff like that. People might be taking a wait and see approach like we are. The VIX spiked a little bit, about 18%, but it's still under that $20 range, which is where your volatility really starts to kick in, and there's a danger of a shot up to 40. So the market's just undecided right now. Traders are undecided. They're not sure. Probably the day traders are having a field day with this volatility. But other than that, it looks like it's just kind of a wait and see day. And that's the way we took it, guys. Like I said, we sold cover calls in our live room this morning with our members. We're set up on these plays. We're short the spider, we're short Twitter, and we're long energy out to September. So we'll see if we can cash out this spider real quick for a nice little profit, put a little money in our pockets, see how this market shakes out, and maybe get some more money back on the table. I don't know. We'll be nimble. Anyways, so look, guys, I know you guys are bated breath over the stock of the week. What we're going to do is we're going to sit through this FOMC minutes tomorrow and see how that kind of shakes out and see if the market keeps up with the jitters. We don't want to buy into this right now. Especially if in a day we can buy lower, or 2 days we can buy lower. So the week schedule will be, we'll do the normal market updates the rest of the week daily, and then we'll do a stock of the week on Thursday after we see how this market shakes out from whatever goes on with these Fed minutes and anything else that might be lurking out there that we're not aware of. And then we'll do our regular crypto show on Friday. Okay, guys? So that's the schedule for the week. Other than that, guys, don't panic. It could be a market that's just kind of digesting big gains. It could be a market that just got a little skittish because there were some underpinnings that spooked it a little bit. Maybe some of the inflation concerns, slowdown in labor, things like that. But it is also a market that could resolve this very quickly. And that's why we're taking this kind of wait and see attitude here for at least 24, 48 hours. We'll let the market tell us rather than we try to tell the market. You guys know, anytime you try to tell the market, when you ever been there, sitting there, you're in a trade and you're yelling at a chart on the screen. Well, you're trying to tell the market what to do and the market's laughing at you. We don't want to do that anymore. We used to do that a lot when we were young traders. So look, guys, you guys have a great Tuesday. Hope you guys had a great weekend. This is actually a perfect day to ease back into the week. So, and that's how we're taking it. We're happy happy with our plays on the board right now. And also too, like I always tell you guys, make sure you've got a certain amount of your portfolio in great stocks. Like we've owned Apple for a long time. And when it was kind of gyrating right down in those low 120s, people were, what's wrong with Apple? The market's making new highs. Market's making, well, look at your patience is paid off, right? Not only did you get a dividend at those lower amounts recently, you also now have a stock that's back over 140, right? So interesting. You see how time is your friend. The big, great secret of Wall Street, right? Everybody, you guys probably get those emails too. I get them all the time. Subscribe to us and we will show you the great secret of Wall Street. This great secret of Wall Street is patience and compounding. That's all it is. When they're on CNBC telling you sell this, buy this, sell this, buy this, they're not doing that. And you can see it in their when they have to talk about what their firm actually owns, what they actually own, what their family owns. They never own any of it. None of them own the stock, but they're telling you what to do with it. So the great secret of Wall Street, guys, is there you go. It's shared. I just shared it with you. It's patience and compounding. Okay. Great stock's a great stock. All right. So look, guys, let's leave it on that note. We'll see how the market shakes out the rest of the day. Like I said, I'll be back with a market update tomorrow. We'll see how things shake out the rest of the day. And then we'll do a stock of the week Thursday after hopefully we see some resolution from these Fed minutes and anything else that's out there. And then we'll do a crypto show on Friday. We got a lot to talk about again on the crypto show. So tune in for that. All right, guys, have a great, great Tuesday. Thank you.